good morning to Nikhil, Sita, and everyone who's joined here today. We also have Sriram, our founder, who has joined us. And today's webinar is a part of Matchathon 2020, which is brought to you by Innopark Ventures in collaboration with Niti Aayog. That's the Atal Innovation Mission, AIC IIITH Foundation, and we have a lot of other renowned knowledge and outreach partners. And Innopark Ventures, as you're aware, we are a young, a stage investment company. And so here we have Sita, the CEO, and she's here to have a very exciting chat. And we're all looking forward to your conversation today. Thank you again, Nikhil, for joining us this morning. Over to you, Sita.
Thanks, Joe. And hi, Nikhil. Thank you so much for joining us today, for offering to spend this time with us. I think most of us in the Indian startup ecosystem have followed your incredible journey and phenomenal success, right? So, but for the benefit of our audience and people who will be accessing this video and people who are a part of the audience at the moment, first-time founders, aspirational traders, professionals, and other people, right? Let me just dial back a little bit and give a quick recap of your journey. At 15 years old, you were a national level chess champion. 17, you went on to trading. And then you founded Kamath Associates, where you managed HNIs and their portfolios in the public market space. Then you went on to co-founding Zerodha in 2010, along with your brother, Nitin. Some statistics on the phenomenal Zerodha, though we've all heard it, we'll say it again because we're also proud to say that this is a part of the Indian ecosystem. Right? You have over 1 million active users. Zerodha clocks in, used to clock in 3 million trades a day. Now it's become 7 million, if I'm correct. Yeah. A day. This not just in India, but on a global standpoint, this is very impressive, right? You guys have over 1,500 employees across India. And the story of True Beacon. In 2019, you started True Beacon to manage, to bring, global fund experience to ultra HNIs, right? We'll go into each one of these separately, but I'd like to start off specifically before diving into the financial sector and the fintech sector and all of that, right? Specifically, which is important to our audience, and also the time at which all of this is happening, right? All our mindsets and the uncertainty and unprecedented things happening. What helped you? What are some of the attributes and qualities and habits, if I may say so, helped you as an entrepreneur and that have evolved into the Nikhil at the moment?
Sure, Sita. Firstly, thank you for having me. Thank you, Sita, Shri, and Naveen. If I had to attribute it to two qualities, I would say the first being perseverance. I think many times across any journey, you will have times when things do not work out how you planned them, but to be able to admit that things don't always work out the way it is planned, but still have a plan B or figure out how else you can solve the problem, I think is extremely important. And I think most often to grow organically is incredibly efficient. A lot of the times we map out long-term plans and we try to follow them, and we are disappointed along the way when we don't meet targets. But to remain nimble and agile and kind of hear what the market wants from you and constantly change and not have long-term plans, I think is also extremely important in a way. I would attribute it to those two qualities. I think they go a long way in building a startup, because we all are living in an ecosystem which is evolving as rapidly as it is.
Great, thanks. And I think it's very apt, especially nowadays you brought up that, things don't go according to plan. And the biggest testimony is of the world that we're living in at the moment,
Mhm.
right? We all had plans and boom. So, which brings me to the next question.
Mhm.
When there's an overemphasis on success these days,
Right.
where
Mhm.
you have to be a successful student, you have to be a successful this, you have to be a successful entrepreneur. There's so much emphasis on success. um, what is your view on challenges, and what is a personal challenge that you've crossed and that has taught you heaps about challenges being important as well? So rejection, challenges, failure, all of this.
Yeah, often you find that failures teach you a lot more than successes do. Success again is very relative. I think we are in this constant competition to succeed in a relative world where we want to do better than the next company, better than the next guy. Uh, if the pandemic, to me personally, if it has taught me anything, is life is finite. I mean, our lifespans are a certain amount, and considering all that is happening in the world, I think the uncertainty around that has increased. So it would be very important not to take yourself too seriously in the current ecosystem and kind of be willing to, enjoy the journey while you're running after success. I think that's extremely important. Many people in the startup ecosystem, because they are driven by pressures of investors, pressures that they might have by the competition in their industry, forget that at the end of the day you might build the largest company in the world and have the most successful startup, but I think life has a lot more to offer outside the success that a company might bring, and I think it's very important to live along the way. Yeah.
Yes, I absolutely agree. Important to live along the way, especially when there's mounting pressure from all
Mhm.
sides. And
Yeah.
you would know that well, I think.
Yeah. Yeah.
But having said that, and having bringing investors into the conversation, you guys
Mhm.
bootstrapped.
Right.
It's also a phenomenal story because you bootstrapped, right?
Right.
So for all of our entrepreneurs, first time entrepreneurs or second time around, or aspiring entrepreneurs, what are your thoughts on, you know, getting investors on board? Too early, too late? Is there a right time? What are your views on that?
Okay. The way I look at it, I think we are obsessed with this valuation metric. I think companies, even before inception, even before they actually begin, spend too much time thinking about what valuation they can raise money at, what valuation they will be at in 3 years, 5 years, whatever. I think valuation as a metric for all practical matters is irrelevant. I mean, uh, without sounding too altruistic here, if I'm a founder who is looking to make money from the company I start, the valuation is still not how much money the founder gets to make, or the founding team, or the people at the company tend to make. I think the excessive importance that we give to valuations has to stop. And the point of a company has to be to turn a profit or to solve an issue. I think maybe we spend 60% of the time thinking of valuation, we should be spending 10% of the time. The one great thing about not having external investors on board is it makes you very agile and nimble as a company. If you had 10 investors who had to kind of like vet every decision that a company has to make, that in itself adds a significant amount of time lag between thinking of something and being able to execute. I think there is a huge advantage in not having investors on board and you as the management team deciding the path that your company should chart. Most often, you would find investors who are not as aware of your industry as you and your management team, which are working on one product full time, might be. So, I think there is a case to be made for both sides why investment is good and why having investors early is good. It might be a product which requires a significant amount of money to be able to scale. Uh, Both schools of thought have something you can attribute uh, good and bad. But in my personal opinion, in my experience, I feel like companies who acquire customers by spending money, like short-term money, by giving them incentives and bonuses and stuff like that, the stickiness of this customer is not a lot. So you would probably be better off focusing that money on building a better product and growing organically versus, throwing money out in the market and getting a customer who will then 2 years down the line switch to another person who throws more incentives and bonuses their way. So, in my opinion, I think there is a case to be made for both sides, having investors in early, late bootstrapping. But I would lean more towards the model wherein you don't have too many investors on board because you give up a lot more than you gain.
Yes. Despite sort of being in the seed stage investment ourselves, we sort of our philosophy revolves around, make sure you need the money. You really need it before you just
Yeah.
get carried away by peer pressure and think you need to raise an amount, X amount. So, from popularly, we've said we're going to have Nikhil on, to speak with us, and as entrepreneurs, what questions would you have? Of course,
Okay.
the mindset question was the most popular, and another one was
Which stock to buy?
pardon. Yes, I
I
will
get
come
that.
to that. And then I think the more generic one was how to pick a sector when starting a business. These were
Right.
aspirations from students across engineering universities
Yeah.
across
Yeah.
India. They said
Uh-huh.
the general pattern was how do we pick a sector, right?
Hmm.
There's a couple of options available to us,
Hmm.
and these are very early on aspiring entrepreneurs. So yeah.
Hmm. Yeah, sure. I think which sector you pick to solve a problem in is as important as the problem itself. Uh, Very often, I think there are sectors which are in the nascent space in India, and there are sectors which are reaching the inflection point. There are sectors which are fully matured. If I were to recommend something, I would say the fintech and the banking space. We are still a largely unbanked country for practical purposes, and I think even for the government, from their perspective, to make the country come under the formal financial ecosystem, uh, makes many things like the smallest thing being taxation a lot more efficient. I make a case for fintech because the stock markets in India, the number of people who have direct or indirect access to the stock markets in India, that number is at about 5%. The same number in a country like America would be 95%. So this number in India is definitely set to grow. A lot more people will start investing. The ecosystem today, interest rate cycles are going down. Bank FDs are not kind of returning the numbers that they would maybe a year or two ago. Government doesn't want you to buy gold because all of our gold is imported, and we have a bad impact on our fiscal deficit. And the real estate sector has had this overhanging malaise for a couple of years now, or even the better part of the last decade, wherein the rental yields that you get on a property has gone down to as low as 1.5–2%. So investors with capital need a place to allocate capital. With favorable taxation when it comes to investing in equities, wherein you only pay 10% long-term capital gain tax if you hold equity for more than 12 months, a lot more money will definitely come into the sector. This number of 5% is definitely set to grow over the next decade. It might go by as much as 300–400% if it continues the current trend. So I think when you're picking a sector, pick a sector in its nascent stage, like fintech or like the stock markets or even banking. The problem with banking is to do anything there, you have a huge entry barrier, but not the same with fintech. You can create many products. There are many problems yet to be solved and many opportunities in place. So I would say fintech is one big sector. And I think the way we perceive education in India, even today, our method of pedagogy in a way much reflects how education used to be during the Industrial Revolution. We teach our kids to work in factory assembly lines in terms of, how they can do one task repetitively very well. I think the education system has to evolve. It's expedited and exaggerated by the incumbent pandemic that we have right now. But education will change, education will evolve, and I think there will be many opportunities there as well. So if you had to ask me, I would say fintech and education are great places to focus right now.
Great. That's hopeful, and the statistics look hopeful. I'm
Yeah.
sure it'll bring a smile to many of the people who've been, toying with this question for a long time. Um, Going back to the fintech sector and the banking thing, Zerodha has attained its non-banking financial company license, right,
Yeah.
in 2019. And it aims to make loans more accessible to retail investors and not just high net worth individuals. Now,
Right.
could you throw some light on that? You know,
Yeah, sure. I'll be really candid here. I mean, we've had the NBFC license for a couple of years now. We've been trying to build a product around how you can keep the shares you own with some kind of a pledging system and take margin money on it and be able to invest. Uh, we've been working on it for a few years. It has not taken off yet, but I think we have spent the time in building systems which will be more efficient than the peer companies out there. So it should be out soon. I mean, we're just at the brink of starting it, and we'll soon know, how well it does. It's a good learning experience for us because it's a new industry even for us.
yes. Thanks for sharing that. Um, Now, True Beacon, right? The performance metrics of True Beacon compared to peers in India and globally, right? You
Mhm.
guys have different things like, no placement fees or management
Yeah.
fees,
Ah, ah,
which gives an opportunity to a lot more people to be attracted to True Beacon. I think
yeah,
we'd love to hear more about what you have to offer and, how it sets you apart truly from peers globally and
yeah,
within.
yeah. Yeah, sure. So firstly, let me categorize. True Beacon is a asset management company focused on the, top 0.01%. It's a very niche product. It's for clients who want to like allocate about 15 crores of their money onto an asset management company. We don't even think of them as clients, but we think of them as members, and we service them outside of how typical asset management companies would. So the asset management industry in India, if not the rest of the world, has not really changed over the last 1 or 2 decades. What typically happens is you go to an asset manager or you go to a private bank and you say, here's $1 million of my personal money. Can you manage it for me? The bank, to sell you a third party fund, will typically charge you 1 or 2% of your corpus. The fund manager then who gets the money will charge you an additional 1 or 2% every year, immaterial of the fact that you might lose money or you might make money. This is followed up with many inefficiencies, like there are setup costs, there is a lot of opacity around how well your fund is doing. You can't see the NAV every day. There is a lock-in period. You can't take out your money for 2 or 3 years. There is an exit clause where you have to pay some money again. So we kind of wanted to get rid of all of these. So we removed the distributors, so no middlemen. We removed the standing fees, so no AMC, no annual fee that the fund manager charges, no exit load, completely open-ended, a transparent system wherein you can see your performance every day and what is happening with your money. So we took away all of these efficiencies and we thought we'll see how well the model does. And in the spirit of being client aligned only, we only charge in True Beacon as a company if a client puts in $100. and the 100 becomes 110, at the end of the year, we charge 1 as fee. So that is very different from people who charge you $5 as soon as you put the money in standing fees. So we hope to change the industry, and we hope to also create a community of very influential strategic investors from across the world. Early days, our intention with the fund is to outperform the Nifty, the benchmark, by about 6 to 8%. Right now, we're doing fairly well. We've completed about a year now. I think we're close to a year now. Time will tell where this company will grow, but I think early days, but the response has been incredible. Everybody who's on the platform is very happy, and it'll probably take 2 or 3 years before we ourselves know what this company can be. But we're in the process of setting up our next fund and make the offering a lot more diverse in a way.
Great. Thanks for sharing. I think I'm getting a lot of I'm getting questions on the side while I'm asking you all about Zerodha and
Yeah.
True Beacon, and they said while we'll take some of those towards the end of the session, I'm glancing at my notes because I've made so many notes, and I'm like, how do I pack this into the 1 hour session with Nikhil, along with all the questions that we'll be answering. Um, some of True Beacon's capital preservation strategies,
Mhm.
right?
Yeah, sure, sure. So we at True Beacon have two buckets where we allocate money. One is a long only passive bucket. Think of it like a mutual fund, like a long only mutual fund, which does not invest in mid cap companies or small cap companies. It's focused on large cap nifty companies only. So these are the 50 largest companies in India. We allocate money using a bunch of proprietary research strategies.
Mm-hmm.
We kind of allocate money fundamentally on this bucket. So we would look at companies' income ratios. We would look at how much debt is on their book, what sector they are in, how hopeful we are of that sector in the next 10 years. So think of it as very, very fundamentally sound portfolio with the largest companies with the best compliance, governance, and track records that are available in India. A typical example would be companies like Infosys, Cipla, Reliance, these kind of stuff. This makes up the long only portfolio, which is about 65%. The balance 35% is a portfolio based on mathematics. It's a bucket which tries to take advantage of volatility over the short term. So we run strategies like mean regression, strategies on correlation, delta hedging, pair trading, everything based on historical correlations between companies and how, when they diverge from the mean, if they go a couple of standard deviations away from how much correlation they should have, we kind of like sell the opposite sides and try to wait for them to come back to the mean or regress to the mean. So the long short bucket kind of does well when markets are volatile or the markets are going down and acts as a natural hedge on the long only portfolio. So the combination of these two, we hope over the long term will give us a 6% outperformance over the Nifty.
Great. And I want to quickly allude from, all of the technicalities of True
Mhm.
Beacon and Zerodha that we've discussed.
Right.
Um, to a large looming thing on everybody's mind, you've entered the sector when it was, I think, post 2008, right? So it was a good path, at least for you to start off.
Yeah. Yeah.
uh, for people now,
Yeah.
starting off in the pandemic, right?
Hmm.
uh,
Hmm.
what would be some of the things they need to watch out for, or how is it different, would you think? Would you be able to do the same thing now, starting now,
Sure.
or
Sure. Sita, so much in every company's story depends on luck. I think there are always more hardworking, smarter people out there. One of the biggest attributes as to why one company does better than another is the timing of the company. if in all honesty, if we did exactly what we did in 2009 today, I don't think we would have worked as a company because the times have changed. There are different trends at play. We will have to have figured out what works in today's marketplace. So I think people have to be aware of that when they start companies, and I think the ability to change and evolve very quickly is the biggest strength any company starting off right now would probably have.
Yeah, I completely agree. And I think that would lead way to my second question about the volatility around always and trading being a competitive sport, as they call it
Yeah,
in the trading world, a
yeah.
sort of competitive sport. You've said that yourself.
Hmm.
Um, you are a practicing stoic. I don't know if many people know that.
Well,
Right?
I think when it comes to trading, there is always emotion involved when you're either making money or losing money. I think it's very important while you're trading to not let your emotions get the better of you when you make money and when you lose money. So over a period of time when you have, so I've been doing exactly what I do today for maybe about 16 years now. I have the same routine and the same kind of markets I am involved in as well. So I think it makes you a little bit stoic because if you were to be happy one day and sad another day, it would be too, volatile for you personally. So I look at the markets and I'm able to put them in a compartment and rationalize them in my head, if you have a great day or if you have a bad day.
That's a great way. I think we should all practice a part of that in our daily lives, considering the situation we're in at the moment. I think,
Mhm.
especially in an entrepreneurial journey, whether trading or not, I think you're faced with similar things. You have the
Yeah.
high highs and the low lows.
Yeah, yeah,
But
totally agree.
it makes sense to compartmentalize. Um, so, going to any leader that's inspired you, Nikhil? Any leader in history that's inspired you and you sort of adapt the leadership style or has been good for you? So, because there's a lot of thing about leadership lessons and leadership styles and all of that. Is there a particular leader from history that's inspired you or living or, from history, whose leadership has had an influence, strong influence?
Uh, you mean like a political leader or a corporate leader?
I would say you're free to choose, whichever one that you want to name.
Um, this is a tough question because there are so many who are impressive in so many different ways, right? I think a very vanilla answer would be somebody like a Barack Obama.
Uh-huh.
But if you had to actually think about it, I would say, uh, who who would I say? The thing is, there have been many dictators in our past, but uh, who now, when we look back upon, seem like these monsters. But there are many incredible qualities among them as well because they came around in a time of adversity, started with nothing, and even before they became bad to the world, they were able to champion a cause and get everybody in the country to kind of believe it, notwithstanding how bad that cause might have been. So there are many like that who are interesting. I don't think I would say inspired, but everybody from the Medicis to Stalin to Hitler to all of these guys have some kind of interesting characteristic about them, which is interesting to read about and know a little bit more about. But I think all the modern leaders, I think, are cut from the same fabric in a way, from the same cloth. They're all very similar to each other. I think we live in a time of populism, right? Everybody from Mr. Modi to Boris Johnson to Mr. Trump, they're all going after the populist vote. So they're all very similar, even though they work in different geographies and are very different as well. So there isn't much diversity to pick leaders out of right now because inherently there are so many things in common between them. But I think when you go back in history, there are some very interesting characters.
You very cleverly were diplomatic about the whole thing, but I'm in agreement with you when you say they've been dictators in the past, but they've got there's some characteristic in each of them that garnered so much attention that
Yeah.
it's interesting to study. I wouldn't say, like you said, inspiring or probably impressive, but definitely interesting to
Oh, yeah.
study. Um, so now, I think people are eager to ask you questions. Before that, I would like to also touch upon the fact, which is important at the moment, I think all of us do, which is giving back to the community. So I think giving back to community, you know, I know that you're passionate about giving back to the community, but I also want to hear from you why it's important, not just in times like these, but or in general, right? Now we're all coming together during this pandemic, but why it's important to give back to community in whichever way you seem fit. And what are some ways you think we should all be giving back, and some of the ways that you've been giving back.
Yeah, sure. I mean, there have been plenty of opportunities with Corona. I'm sure even if people want to go give back now, there are like hundreds of opportunities to give back. We've been doing a fair bit during Corona, but without sounding too I wouldn't say altruistic or I don't think my opinion of myself as a human being is as high as I once thought. So I had this very interesting conversation with my therapist who was telling me the reason we give back is a concept called helper's high in our brains. It's a bunch of chemicals that get released in your brain when you think or when you perceive that you're giving to somebody. I can attribute giving back or the need to give back on that. But I think giving back is important. We as a community have kind of become too divergent when it comes to things like income inequality and stuff like that. I think the top 1% have way more than the bottom 99%. We've had this many times in our history, and each time there has been this level of divergence, it has led to like a coup, or the king gets overthrown, or the political party gets overthrown, or capitalism quickly evolves into some form of socialism or communism. History has taught us that capitalism, maybe not in its correct form, in its current form, but in some form, is the most efficient and peaceful form of governance that we have available. So let me make a case for this, which is different from what you would typically hear. I think it is important to give back because if that 1% does not give back, I think that 1% will soon cease to have the privileges and the opportunities that they have in the world right now that they have garnered by virtue of capitalism. It sounds like a really convoluted answer, but the simple thing to have said would have been, because it makes you feel better, I guess, and
Yes.
maybe help out.
Yes. I've read an article that says the quickest way to feel happy, or the cheat code when a lot of people are asked, psychologists are asked, cheat code to happiness, they say do something for somebody else and then you'll instantly feel better.
Yeah.
So I think it applies over here. And you're right. If the top 1% spends their money, then it's,
Yeah.
I mean, that's what it is at the end of the day, right? Comes back. So we'll just move on swiftly to the Q&A section because I can see the question and answers piling up. I think Shri, who you know, he's also in the audience very quietly observing.
He's
So
here as a panelist, dear Sita.
I think you can take it from the floor. Nikhil and I know each other very well, so we always chat.
all right. I will. Your first question is from Rajiv. He says, Nikhil has been pretty vocal about surge of first-time investors. Euphoria seems to be very similar to what we saw back in 2007 when everything was flying. Many traders who were first-time traders in 2007, probably did not come back up after 2008. How do you see this ending? Rajiv, is that your full question? You can type to me.
Hi, Nikhil. I think that's the question. I mean, I didn't want to ask anything else. Actually, I was the first time trader back in 2007, right? So my first job and things were looking. I mean, the famous one was the Reliance, right? So I mean, saw all of that, and then 2008 happened, right? So I mean, somehow I feel that same thing is happening now. I mean, a surge of all the Robin Hooders, probably, right? So I don't know how this is.
Are you back
Sorry,
in the market after the 2008 crash?
sorry, Nikhil.
No, I was asking you if you're back in the markets after the 2000.
No, I was always there. I was always there. I was not active trader. So yeah, I mean, I just saw it all around me, and I was pretty kind of not so much excited with all the euphoria. But I mean, looking at what is happening, and typically what happens when people around you start talking about individual stock, I mean, you know things are going to be bad. I don't know how you see that right now.
Yeah, sure. So I think one of the biggest issues is, so the direct equity inflows have gone up a lot over the last, I would say, 60 days. So people are not going to fund managers, and people are investing directly, and people are shying away from systematic investment plans and mutual funds. I'm talking about the retail end of this, because the HNIs and ultra HNIs always had managers. The problem is when people are investing on their own, at the very first sign of volatility, when there is, say, a 5% correction, a retail investor is a lot more likely to panic and exit everything versus a fund manager. So it might exacerbate any correction we might have in the market. So tomorrow, for any reason, if the markets were to go down 5%, the next 5% might come very quickly, because more retail investors have positions in the market. So that makes it a bit scary. And retail investors, typically the first time people coming into the market, do not traditionally hedge their positions or have any kind of insurance or diversification at place, and it could erode capital very quickly from the market. So I think you need a mix. I'm not saying direct investing is bad. I mean, I'm a broker at the end of the day, and I love the fact that more people are investing directly. But I think you need to have some kind of diversification, have some allocation to fixed income, have some money with a fund manager somewhere. If you have a pool of all of those different asset types, I think you'd be fine.
Nikhil, the follow-up question was, do you? I mean, do you? What happened for retail? Not all even in right? So,
Right. Yeah, see, my biggest worry actually does not lie in the stock markets. My biggest worry in terms of what could hit the economy is the real estate market. I'm waiting, much like everybody else, for the moratorium to end, see what the actual NPA picture is. And so real estate companies have not really reduced the price of real estate, albeit for like really practical reasons. If you take out the interest component, they still work at 15 to 25% kind of margin. So they don't have the room to discount properties anymore. But the underlying buyer now is expecting for discounts which are a lot larger than 10 or 20%. So I feel if the real estate industry crashes, if a couple of big players shut down, I think that will in turn kind of have a big impact on banks, in turn have an impact on interest rates, in turn have an impact on stock markets. So I'm watching at real estate very closely to see what might happen there. But in terms of the markets alone, I'm fairly sanguine. I think very hard probably impossible to figure what the markets will do in the next 6 months or in the next 12 months. But at this point, we are highly hedged as much as we have ever been because we don't like the idea of carrying too many longs into the current ecosystem. And that would be my opinion. Rajiv?
All right. So we have a question here from Madhu Krishnamurthy. Hi, Nikhil. This is Madhu here. I was intrigued when you spoke about not being overly excited by making long-term plans, probably spoken from a valuation perspective. Are you saying that the here and now way of management is relevant for today's times?
I think in an ecosystem where everything changes so quickly, I can tell you from personal experience, I've made many, many long-term plans. 9 out of 10 times they have not worked out. So I think you have two options at that point. A is either stick to the long-term plan, try and figure out how to course correct to achieve the long-term plan, or B is just come up with a new plan, and I think that works more often. I subscribe to that school of thought. Might not necessarily be correct or wrong, but I think having a plan beyond like 6 months is, I think you need to be like Nostradamus or somebody like that to be able to pull that off.
Thanks for that, Nick. Actually, that makes me feel a lot less weird.
Yeah, I've had so many failed plans, Shreek. I think if we all start writing down our plans and then aggregate how many worked and how many did not, we'll all be surprised. Because if one of those plans work out and you become a little bit successful, hindsight bias makes you focus on that versus the 100 other things which did not.
Absolutely, Nikhil. I think we both probably need to have a long session sometime in Bangalore on these stories.
Yeah. So me and Shri speak every 2 days anyways, I think I know what he's thinking in terms of the market and in terms of the economy and the real estate industry.
One of his favorite interests, real estate industry.
Yeah.
Though I don't do much in it. I think Vamsi has a question. You can read it out, Sita.
What is the potential and promise of cryptocurrencies in India?
Well, ever since the government came down on it, I mean, nobody can do anything. So the government came out with a mandate that, banks can't allow for end users to buy Bitcoins or Ethereum or whatever cryptocurrency. And ever since then, the use case in India has kind of gone. I quite don't like the asset class because I have never seen an end use for it. So currency at the end of the day is a mechanism to exchange value. Uh, the reason we look upon the rupee the way we do, the dollar the way we do is back in the day, the dollar, if you took it back to the Federal Reserve, the Federal Reserve would give you a certain amount of gold, and gold had an established value in people's mind. They changed that and they no longer give gold themselves, and they had their own transition where they went into the Bretton Woods system and to the point where they are now, wherein the dollar has no inherent value. But the dollar gains value and a real world use case by virtue of the fact that you can actually go out and buy and sell stuff with a dollar. In that sense, Bitcoin as a currency to me does not make a lot of sense, and it also make it very hard for the government to regulate something like that. So I'm not very bullish on a alternate currency model like Bitcoins. Personally, I'm not, but I'm sure the underlying technology has many use cases and stuff. In a registry where you can trust every user that is on the registry, I think the underlying technology has a lot of use cases.
Great, thank you. Any more questions from, please write to all, I think, because if you're writing to me personally, then it's being buried. I think Sham had a question right in the beginning. How shareable gold changes India's future to become the richest country in the world? How should it be achieved?
How should What should change?
How shareable gold changes India's future to become the richest in the world. How
Share gold. Is that what you said?
shareable, it's written shareable. Sham, would you like to ask that question if we unmute you?
Hi, Nikhil.
Sham, one unmute, yeah.
Hi, Sham.
Yeah. So what I was meant to ask is, India has the world's largest gold reserves in the personal possession. So there were certain notifications given by RBI to bring it to the public forums. So, even the banks are NBFCs and all. So
Right,
how
sir.
exactly this has to be done? It's been, I think, more than a decade. I think this process is on.
Yeah, no, I read something about this recently. I think the era when the amount of gold in your, say, in the RBI in our case, determines how strong or weak our currency is long gone, And taking away gold from people who have bought it, paid fair value for it in a capitalistic democracy in a way, I think will bring far more uncertainty than it will help. I don't think it's a great idea. I think uh, our RBI in many ways I think can shore up our currency if we need to by virtue of the reserves they hold, and for the people of our country to kind of take the gold they have in their homes and deposit it with the RBI or give it back, I don't think is the way forward. This has happened in our past many times, not just in India. I remember this happened in Germany sometime in the 70s. It happened in America at one point, where I think 1920s, right after the Great Depression, where the people, the citizens of the country, were asked to take the gold they have at home and deposit it with the banks because they wanted to shore up their currency. I don't think these things help in the long run. And yeah, I think that's how I feel about it.
Cool. Yeah. Thanks.
Thank you. Any more questions? We are getting closer to the end of the session. We've got about 9 minutes with Nikhil. So,
One more question, Nikhil. This is about environmental portfolio because India has a lot to go in the environmental space. How do you think that the rain matter, your startup is actually fitting into that, or any other ideas?
Yeah, sure. So we've started a venture called Rain Matter Green, and it's
Yeah.
kind of investing on funds which are focused on the environment, not with the outlook of generating the highest alpha necessarily, but more in terms of how much of an impact can we have on climate change and stuff like that. So what we find ourselves focusing most towards is creating artificial forests on barren land. I think we're working on that in a couple of different ways. So we're trying to figure out how to get barren land from the government, artificially grow a forest there using the Miyawaki method, and then kind of calculate how many carbon credits that forest might create and make it a replicable model for other corporates to follow. So it'll kind of pay for itself. It might never really turn a profit, but the project should pay for itself. We're focused on that.
Thanks, Nikhil.
There's a couple of questions, Sita. Maybe I think one of them is interesting. I think being a practicing Stoic, I would like to hear your response to this, Nikhil. So one thing that I never shared with you is that I'm an aspiring Stoic. I've never got there yet.
I don't think I'm actually. Heard it from a lot of people because I don't react to anything that you must be stoic. Because I the same poker face all the time.
Nice. So Rajat is asking a question where he says, apart from money and success, he wants to understand what else, lets you know that you're on the right path.
Yeah, I think your interpersonal relationships kind of make you more happy than money or success in a way. I think how cherished and important you feel in your own relevant community is very important. So, I mean, these Bhutanese people are supposed to be the happiest people in the world, right? So, one of them, ex PM, had come down to Bangalore and he was talking to the YPO crew and stuff like that. And they have a happiness index. and they talk about which criteria on the happiness index are most important. And I was asking him, why are you guys so happy? So he broke down the index, and the very first column on the index, which makes the Bhutanese happy, is assets. So once somebody owns a home, it goes such a long way towards how happy they are. But the very next thing was friendships and family. I think that has a significant role to play in how happy a person is.
So, I keep telling people that, categorize wealth into four different buckets, right? And then, so one is your mental well-being, your physical well-being, how great your relationships are. And the fourth one is actually the physical wealth, which is whatever, material form of things that you hold. So you can't be, a 10, a 10 on one and then a 0 on the other one and then expect to feel that you have a balanced life.
Yeah, totally agree.
So a couple of other quick questions here. So one question is, there's somebody wanting to understand if Zerodha can help them access the international markets.
Yeah, we're working on a product which will allow you to do that. It will have to be under the prescribed LRS limits that RBI has for every individual, but soon you will be able to. I think the problem with international shares is a lot of them are trading at prices like, $5,000, $10,000, making it unaffordable for the retail to buy into these shares. So we were considering if there was a way to break them down into fractionals and allow for retail to trade, but doesn't seem like that might happen. But we'll definitely allow people to invest in the US markets as quickly as within the next couple of months.
That's exciting. I think one challenge which the investors will need to be aware of is, of course, the exchange rate fluctuations. Something that they need to figure out. The other question was from a person who's saying that, look, as a startup, you don't have much money. So how do you attract and retain talent at that stage?
I think attracting talent, as far as we have experience, it never works when you go to a headhunter. You always find the worst kind of people on Naukri.com, Monster.com, or these professional HR companies. They just throw like crap your way. You don't even want to go there. I think go in your network and ask around for, if you're looking for a developer, find a developer who's your friend and then go ask him, do you know any other developers looking for a job? And keep doing it until you find somebody good, especially if you're a startup with no money.
How does that change when you scale up, Nikhil? Is it the same strategy you guys continue to use now?
I think referral models are great. I think if you can incentivize your employee base to kind of bring in people, if you tell somebody, bring in the next developer you hire, and if he stays for 6 months, we'll pay you 1 month of his salary or something. I think that works very well. Because you get both a new employee and mentorship because he wants the other guy to stay for 6 months. So he gets his insight.
Oh, I think one from Harry Vanham. It says Zerodha has Kite and Coin. Both are managed individually with different apps. As a user, I would prefer to see all my investments at one place. Is there any reason to maintain mutual funds and stocks separately?
There isn't. I think I'll have to check. I'm not entirely sure, but I think on console you can see them both together. But I think there is a place where we show everything together.
With that, we're also right on time to end the session. And if there are no more questions, I'm sure people will be writing in after the session as well. We'll see if we can get Sriram to get them to you post the session if there are any relevant ones that come our way. Thanks so much, Nikhil. It was so much fun, because it can be quite monotonous to talk about the financial markets and, the volatility of it all and trading. And I'm not saying that it's boring, but I'm saying that it could be that, super technical in that. So thanks for adding the fun into it and keeping it very real more than anything else. I think when people see role models like you, especially aspiring individuals, they see that its success is relatable and it's something that's achievable, like not to be put on a pedestal. So thanks for making it so fun and real. And I think my takeaway is, like Sriram, I'm going to practice being more stoic in the way I approach things. I think it's a lesson for all of us. It saves us all a great deal of emotional outbursts and healthy mental space. So keeps us in a healthy mental space. Thanks for that. Thanks, Joanna, for setting up everything for it to go seamlessly. That is not Naveen Tej, but that's Joanna. She's just using somebody's account because her thing fell through. So yeah, we're quick to run with what works, much like what you've spoken about today. And thanks, Sri. It was nice to have you pop up and have a chat with Nikhil. Thanks again, Nikhil, so much. I'm sure the audience appreciates it. We appreciate it.
Thank you guys for having me.
Thank you. Bye-bye.
Thank you, Nikhil. Bye-bye.